All right, good afternoon. Welcome to the 2025 Valley Market Recap. What we're going to do here is we're going to dive into what happened in this past year in the national housing market, what happened this year specifically in the Valley, and then most importantly, what action is this going to cause me to take? So there's going to be a lot of numbers here. I appreciate you joining me. If you just want the slide deck and you want to look at it later, just reach out to me. You can reach me through text or call me, or you can send me a message here, whichever one you'd like to do. So thank you for joining. We're going to dive into this. So as we go through this, I want to keep in mind there's a couple different ways to handle statistics. Way number one is really, really profitable. It's really exciting. It's really like full of mystery and intrigue. And way number one is where you start with a story and then you go and find the data to back it up. And this is fun. You can tell some incredible stories this way because you can find data to back up almost any story. The other way, the more intellectually honest way and kind of the boring way that we're going to do is we're going to give you the data and then we'll tell the story from that. So that's what we're going to do. And it's really, really interesting to go about it that way because we start realizing the things that we're seeing and hearing and reading are maybe part of that first option, and it's maybe not always the whole story. So we're going to start with national data. I got this from a mastermind that I'm a part of, Metrics Mastermind. It's really an incredible group, and this information is from Goldman Sachs Investment Advisors, and so it's really good information. So this past year, buyers are really feeling stuck, even though all this data is improving around them. So they hear that affordability is improving, but they just feel like the monthly payments are brutal and it doesn't make sense to them. And then for us in the industry, we're caught explaining why the good news doesn't really feel good. So when we look at affordability, it's helpful to look at it in context. And so this is a good chart to look at and kind of interesting. We've gone from historically awful to still historically bad. So even though affordability is getting better, it's still really challenging and it's still really bad in a historical context. In a lot of places around the country, renting is more affordable than buying, and it's a really interesting thing. So in your local spot, make sure you know the difference, the different costs, the different total costs, not just the cost of the mortgage and the rent. And the costs that people aren't paying attention to, but they're really starting to hurt, are property taxes are going up, up, up. Homeowners insurance is going up, 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 and maintenance is starting to play a major role in this. And that's the problem that we're starting to have is the median age of the US housing stock is over 40 years old. And so that's causing insurance premiums to go up, insurance claims to go up, and a lot more maintenance on these properties. So this is something that we're noticing. Here in Alaska, we're starting to notice it. We don't have a lot of old homes up here, but we're starting to have more and more old homes. So buyers with all this are feeling kind of lied to. They don't trust the headlines. They feel like their lived experience is contradicting the narrative, and that's really, really hurting their confidence. So when we look at the sales over the whole entire year for the whole country, sales were up, but compared to last year. And so still relatively low, still not near enough sales there's not enough sales happening. There's not enough properties hitting the market. There's just no inventory. And so when we look at that here, there's no new inventory, and builders are building they're building a lot, but it's not keeping up with the demand. And so when we look at this, a lot of people think, well, maybe there's just this huge wave of new construction homes that's going to hit the market. But when we look at this, we can see there's a big amount of property under construction and then completed units, but it's not this giant wave. It's nothing that's outsized compared to normal. A lot of folks are starting to ask, hey, is this like 2008 again? Are we getting ready for a crash? You know, prices have gone up, 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 up. Are we getting ready for a crash? A lot of folks think, no, it's really just stabilizing, not crashing. And with the amount of money that was printed and pumped into the economy, it would be tough to explain a crash. Mortgage foreclosure rates are really, really low, still less than 1%. And you can see this over the course of time here. So really good foreclosure rate. Properties with underwater in their mortgage, so negative equity, really low. Banks are not really easing up their lending policies. So in times past, we saw where banks really eased up their lending policies and created problems, and then tightened it and created more hardship for people purchasing. And there's not any big swings this past year. Borrowers are still really high quality. They've got really high FICO scores. It's not the case that institutions are lowering their standards to get more buyers into homes. A lot of people are refinancing. Over 57% of these refinances this last year were cash out transactions. And 14% of borrowers are in the money right now. And so that's interesting because the amount of properties that were purchased and refinanced with the really low interest rates, we're getting back to more and more and more people with the ability to refinance. GDP is still growing nationally. Labor markets are loosening, they're not breaking. So this is an interesting one. Household income is rising overall. And so households are earning more and more income. Debt is still super manageable. And in this, the thing that I'll highlight, I don't have a slide for it, but the debt that's causing problems for people that's in the most default is credit card debt, car debt, and student loan. There was a brief pause on student loan repayments, and now that they have to pay them again, there's been a big increase in delinquencies in student loan debt. Okay, so that's the national look. And I wanted to start with that again, just because it might not be what you've been reading. It might not be what you've been seeing or hearing in the news. And so that's our national context. And now we're going to jump into specifically what's going on in the Mat-Su Valley. And so we're going to start with residential. We're going to talk through residential. We're going to talk through condos. We're going to talk through land. We're going to talk through multifamily. And I'm going to move through this. It's going to be the same pattern for each of these property types. And we're going to start with this, just an overall look at what volume was sold, what units were sold, and what's the average price point. It goes back 5 years just to give you some context. So this year there was a 15% increase in volume sold, an 8% increase in units sold, and 1,700 homes sold. Compare that to 2021 where there's 2,300 homes sold, 2,100 homes sold. So we're still on our way up, but not back to 2021 numbers yet. Average sales price is up at $440,000. And so this is interesting, 6.6% gain over last year for the average sales price. And so if you've been sitting on the sidelines waiting, wondering if you should purchase something, you can look at this and consider that if you'd bought a home in 2021, you would have earned $100,000 in equity using this as an example. Okay, so let's dive in and look at what really happened here with these other metrics. So number of listings, we can see on this, the blue line is active listings, yellow is sold listings. And so on this, we want to look at two things. We want to look at number one, some seasonality. Is there seasonality? Number two, how close are these lines together? And we can see that ever since 2020, really, as soon as these lines mirror each other, where it's very common to see active listings hit the market and then become sold. Okay, so we want to look at the total number as well. So for 2025, we had a high of 601 active listings, and that was in September, and then a low of 374 in January. So if you're looking at a home in the whole Mat-Su borough in January, there was only 374 homes at any price point to look at. Okay, pretty low inventory historically, but we're starting to see more and more show up compared to these last couple years, which is encouraging. Months of inventory. So with this, 6 months is a balanced market. Anything below that is a seller's market, which gives the advantage to the sellers. Anything above that is a buyer's market, which gives the advantage to the buyers in negotiating. So we've been really sharply in a seller's market all the way since this midpoint of 2020, and especially since 2019. So this year was no different. We're starting to see these creep up a little, but man, a huge drop off here. And we had a high of 4 months in February and a low of 2 months in December. So strongly in a seller's market all year. Days on market from the time it hit the market until it was had an accepted offer. This was really healthy all year as well. Highest was 44 in February, and then a low of 7 in May. And so this was pretty easy to see here as well. List to sales price. We look at this to find out, hey, what kind of negotiating power is involved in this deal? Is it the case where a buyer could go in and write a really low ball offer and get it accepted? Well, this year, the lowest that sellers took on average was like 98.1%, and the highest was over 100%. So really, the sellers have the upper hand, and there's not a lot of negotiating room on the behalf of the buyers as far as price goes. So residential summary, units were up, volume was up, average sales price was up. Pretty interesting to look at for residential. Next, we're going to shift gears and look at condos. Now, there's not a whole lot of condos that sell in the Valley. In fact, this year, 31 sold, which was 10% increase compared to last year, and $9 million worth, so 10% increase as well. Average price point, and barely moved, 297,000, so stayed very similar. For the number of listings, we had a high of 8 to choose from in July, so a lot of condos to look at, and then a low of 2 in February and March. Months of inventory, this is scattered data just because there's not as much information here, but we had a high of 4 in May and a low of 1, so seller's market in this for sure. Days on market, high of 210 in January, and then a low of 3 in July. List to sales price right around 100%. Out of 31 properties sold, there's not a lot of room for negotiating there. Okay, so condo summary, up in units, up in volume, and average sales price, pretty flat. Okay, when we look at residential and condo, we want to be aware of the new construction that's hitting the market. So this is new construction that became active in the MLS. And so when we look at this, there's 366 new listings entered into the MLS that were new construction. And we could see the breakdown, 36 2-bedroom or less, 225 3-bedroom, 102 4-bedroom, 3 5-bedroom. Okay, average list price overall, 502,000, and then you can see that in the different price points. So really interesting. If you're thinking about building a home, if you're thinking about representing a builder, you could look at this and see where there's need. Anchorage versus the Valley on a chart just to see like where the homes being built. There's a lot more homes being built in the Valley, at least placed on the MLS, and a huge increase this year compared to years past. So I'm kind of curious what the cause of that was, but definitely noticeable. So that's a 25% year over year increase for the Valley and 10% decline in Anchorage for new homes being built and placed on the MLS. Next, we're going to shift our focus to land. Land this year sold 734 units, which is a big growth from last year, 17% increase, which is still not quite back to 2021 numbers. 34% increase in volume, and the average price is $97,000. So a strong increase in the average price. So if you've been sitting on land out here in the Valley and thinking, I don't know, maybe I'll get around to selling it, call me. It'd be worth looking at right now because land is selling. Number of listings, we had a high of 627 listings to look at in August, a low of 488 in January. So a lot of land listings to look at, and a lot of them are selling, to be sure, but there's a lot to look at out there. Months of inventory, this one went in between 12.2 months in December down to 7 months in July. So a little bit more in a buyer's market for most of the year, where the buyers have some choice, have some options, and have some ability to negotiate. Days on market, this is longer. The lowest was 13 in November. The highest was 111 in February. And again, we're going to do median here to cut out the outliers. List to sales price, low of 90% in April, and then a high of 95 in January. So this is one area where if you're a buyer, you have some bargaining power, have some ability to ask for a discount. So land up in units, up in volume, up in average sales price, but there's still room there. There's a lot more inventory and land available and waiting for the right buyer. The last one that we want to look at is multifamily. Now, this one's my favorite. You guys know I love multifamily, and specifically, if you have any multifamily that you just don't want anymore, call me. Maybe I'd want to buy it from you. Okay. If you want to buy more multifamily, call me. I can help you find some. But let's look at the numbers here. So Total volume, 71 million, so 33% change compared to last year. Units, 110 units, 23% change compared to last year. Average price point, 650, so big change from last year. So it's important to keep in mind on this, MLS considers multifamily anything 2 units and up. So this includes duplexes all the way up to apartment complexes. Number of listings, there's a high of 48 active listings in June and September, and then a low of 32 in January. And so there's definitely listings available. If you live in the valley, you have seen the new construction, duplexes, fourplexes. There's a lot more that's been built this past year, and so you've seen that. Months of inventory. Are we in a buyer's market? Are we in a seller's market? We had a high of 8.25 months in February, and then a low of 2.46 in January. So a lot of the year, I'd say the year was split. And so just depends on which sector of multifamily you're looking at. You need to be very specific with that. Days on market, this is all over the place. 80 in September, 9 in April and May. And again, this just really depends on where in the market. Is it new construction sitting on the market, or is it perfectly positioned, perfectly priced, turnkey multifamily that's going to fly in the first couple weeks? List to sales price, high of 100.6 in April, low of 95.7 in March. And so again, not a lot of negotiating power for the buyers here. And we can see that. So multifamily summary, units were up, volume was up, average sales price was up, and that was really interesting to see. So sales volume and units increased across all property types. Prices continued trending upward. Inventory remains limited. Homes are selling faster with fewer days on the market. Sales to list ratios remain strong. So overall, the market continues to favor sellers, and land and multifamily shows some really strong growth potential. So that's what's going on in the Valley market. Action items. Number one, take heart. If you're a buyer or a seller in this market, just take heart. You can find the right thing. If you're working in this market, you can do this. Number two, disregard the news. And what I mean by that is watch the news, listen to the news, read the newspapers. But when you're reading it, focus on what is true, what is real. And that leads to number three, focus on what you can control. And then number four, if you're in this industry, increase the level of professionalism and bring the love and great service to your clients. So thank you for watching this. Hope this is helpful for you in your decision-making process. If you want a copy of this, just reach out to me. I'd be happy to send it to you. All right. Thank you.